All right, let's get more on the oil industry with Kent Moores. He's the executive chairman of Energy Capital Research Group. Kent, thanks for joining us.
Well, thank you, Michelle.
Kent, oil prices down today on news that U.S. stockpiles of crude oil had increased to a record 1.4 billion barrels. But they were up earlier after a report that Iran sent a letter to members of OPEC, the Organization of the Petroleum Exporting Countries, saying it would attend the talks in Algeria in September. How likely is it that Iran will attend, Kent?
Oh, I think Iran will be there, but I think people should not hold their breath expecting anything significant to take place. These are the meetings in Algiers, September 26th through 28th. This is the biennial session of the International Energy Forum, and all the really important meetings there take place at the margins. This is where main companies and governments get together to discuss policy. So there's going to be a lot of interest in terms of what OPEC may or may not suggest. Let me give you the two conclusions that are going to take place from Algeria. Number one, there will be no accord at the end of September to either cap or cut production. But number two, we are going to see certain signals take place that will start allowing the price of oil slowly to start rising to about, I estimate, $60 to $63 a barrel by the time we get into early first quarter 2017. And the interesting thing here is Iran and Saudi Arabia, who really don't like each other, are coming on the same page of this entire issue. Iran is still targeting to go back to their production and export levels that they had at the end before the sanctions took place. They're not going to be able to make them. And as a result, they need... Yes.
Kent, you mentioned Saudi Arabia, and Saudi Arabia has been adamant that there would be no deal without Iran on board. But since Khalid al-Fila replaced Ali al-Naimi as Saudi energy minister, the Saudis seem to have softened their rhetoric a little bit about Iran's oil program. Do you not see Saudi Arabia and other OPEC countries agreeing to a freeze without Iran? Is that just out of the question?
Well, I think it's out of the question, but the Saudis now have another difficulty. We can talk about oil ministers. The real strength here is Prince Mohammed, the heir apparent. Prince Mohammed will be orchestrating a privatization of 5% of Saudi Aramco over the next 18 months to realize about $2 trillion and overnight the largest investment fund in the world. The Saudis will be diversifying their economy, not by bringing in new industry into Saudi Arabia, but by controlling things that are generated elsewhere. That fund will be collateralized on the overall value of oil in the ground. The Saudis now must raise the price of oil, if only gradually, to increase the overall IPO revenue yield. They and the Iranians, despite the fact they don't like each other, are now on the same side of the issue.
And Russia as well, which has also been hurt by these low oil prices and is a non-OPEC member. How does Russia fit into this picture? Do you see it also agreeing to these freezing outputs?
Russia was on board in establishing a cap, which was discussed in April at a meeting in Doha. That was unsuccessful because at the 11th hour, the Saudis said they wouldn't enter into an agreement without the Iranians being there. The agreement then was to cap prices at January 2016 production levels, which at the time were the highest the world had seen in years and were not sustainable. Today, the production levels are even higher and even less sustainable. The Russians have already said they will not agree to a cap. On the other hand, there are plenty of informal OPEC-Russian discussions currently underway in which if the Russians can get a guarantee from OPEC, they may be prepared to agree to a cap. Remember, the cap is at a level that few of these nations can sustain in any event.
Well, you mentioned Saudi Arabia, and they have been resisting any kind of cap for the longest time. There have been dozens of bankruptcies in the U.S., as we just discussed, and there was a lot of speculation that this was Saudi Arabia's plan, that they were pushing oil lower to drive shale gas producers and smaller frackers out of the market, wanting to disincentivize U.S. companies as the U.S. was becoming too energy independent. Do you think that the Saudis then have succeeded with that plan?
Well, I think it's about 6 of one, half a dozen of the other. The difficulty with attempting to influence the American market is that unlike any other major producer in the world, there is no central market determining factor. You can't simply get a government to agree, you can't get Washington to agree to an international arrangement and suddenly have production in the United States fall into line. The Saudis realized that very quick. The primary object of the Saudi attempt to increase production and maintain market share was actually not the United States at all, it was Russia. And the primary contest there is who controls the export flows to Asia. Everybody knows from now through 2035, Asia is actually going to be controlling and dictating the energy pulse globally moving forward. That's the real objective. And here the Russians and the Saudis may finally have found a foundation upon which they can agree moving forward on their exports. That, I think, is the crucial factor.
All right, we're going to have to leave it there. Thanks for your insight. Kent Moore is Executive Chairman of Energy Capital Research Group.